Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Hantech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. And as per usual it seems to be at the moment, the Ukraine remains high up on the list of concerns for investors. The movements that we've seen in the eastern part of the country have been escalating at the moment, and the military skirmishes between the Ukrainian government and the pro-Russian separatists have resulted in a series of deaths, and certainly with that continuing to be in the headlines, investors have taken that as an excuse for a flight to safety, to safe haven assets such as the yen and away from the dollar predominantly. Now the dollar index has suddenly come under significant pressure in recent days. Dollar index is now back at a key level, back at around about 79, which is the lowest it's been since October 2012. And in the chart that we've got on the slide here suggests that if this level breaks down, it could see significant downside potential for the dollar. Now, this week we've got a couple of key central bankers speaking. You've got Yellen of the Fed. She gives her testimony to the Joint Economic Committee of the Congress, and this is the second really important public appearance that Janet Yellen's had after her initial press conference from the FOMC meeting that she first chaired. She didn't have a press conference last month for the FOMC, so this gives the market an opportunity to see what she's currently thinking. To be honest, I don't think she's going to be giving too many curveballs. Probably learnt a little bit of a lesson after the first appearance where she did a bit of a rookie gaffe where she said that the difference between tightening and tapering would be tapering and tightening would be around about 6 months. So I don't think she's going to do a great deal today, but still the market will be very interested in what she does have to say. Tomorrow then we've got the ECB press conference from Mario Draghi, and this is an important one because certainly with the inflation remaining rather low in the Eurozone and also growth remaining quite slow, this means that the market increasingly will be pulling on Mario Draghi to do some sort of monetary easing. Now, the OECD, which came out yesterday and actually upgraded the growth forecast for the Eurozone, has actually also put a little bit of pressure on Mario Draghi by suggesting that they think he should be doing some monetary easing as well. So just watch out for that press conference tomorrow. Now, in the FX markets, the dollar index, as I said, has come under pressure, and that has been impacting on these dollar pairs that we've been looking at. Now, euro dollar has broken out now above that $1.39.05 level, and that has now opened the $1.39.67 key high. It looks like it's a little bit stretched near term, so pulling back towards $1.39 could be a decent area to buy, so watch out for that. Cable, on the other hand, has been very strong in the last few days. It had been sort of travelling a little bit sideways, but just gradually higher, but then on Monday and Tuesday it's burst higher and it looks very strong. It's just peaked out underneath $1.70, so that could be the fact that there's a bit of psychological profit taking there, but also the fact that cable has become rather overstretched on the momentum indicators as well. It possibly needs to unwind a little bit, so perhaps back at $1.69 could be a decent entry level. But just bear in mind, shorting into an uptrend is a very risky play, so just be careful of that. Also on to dollar yen. As I said, the yen strengthening has been pulling dollar yen lower. Now dollar yen is back towards and really giving a big test of the key lows of this slight uptrend channel that it's been in, and that's around about 101.50. Now the key support comes in at 101.31, so it's not too far off there, and if that breaks then we're back down at 101.17 and then subsequently 100.79, so some key levels there for dollar yen. Moving on to the indices. Earnings season for the States has not really been as much of a driver for the S&P 500 as perhaps investors had hoped, and the index has slightly turned over a little bit in the last few days and is now beginning to correct. This could also be on the fact that we're seeing a flight to safety as well, so the S&P is now back towards challenging around about that the top of the band of support at at between 1835 and 1850. So 1851 is the key first level that we need to watch out for. For the FTSE 100, it's been in a nice uptrend, but it's now coming off a little bit and correcting back towards the support at 6,770. And if that breaks, we could be back at the key breakout support around 6,706. So that could be happening. For the DAX, we're in a sideways trading band between 9,400 and 9,645. So that 9,400 level is the key near-term level we need to be watching. Okay, moving on to gold. Gold has actually been pushing higher, as I said earlier, on the safe haven trade of the Ukraine geopolitical tensions. Now, this is the insurance trade that has been pulling gold higher in recent weeks, but it does tend to be the case that gold pulls higher on the Ukrainian story, and then as soon as Ukraine starts to drop out of the news headlines, it starts to drift back again. So just be careful of that. It's certainly pulled above $1,300, which is a positive, I think, near term, and it's looking to now build support above that $1,300 mark. If it can break above $1,316, it would open up $1,330. So that could be seen, and that could certainly happen if the Ukraine remains in the headlines. Okay, what are the key events that we need to be looking out for this week? Certainly, as I said earlier, Janet Yellen's testimony to the Congress JEC is the first thing on Wednesday that we need to be worried about. Moving into Thursday, but then we've got a significant amount of data. We kick off with Australian unemployment first early in the morning, followed by the Chinese trade balance, and certainly the Chinese trade balance has the effect on the commodity currencies, so that could be a significant move for some of those majors. After that, we've then got the Bank of England meeting, giving its monthly rates decision. As ever, the Bank of England is not expected to move on rates, but certainly the pressure is beginning to ramp up on the Bank of England, considering the strengthening of the economic data we've seen. Certainly the the PMI numbers that came out the other day have ramped up the pressure even more. So expect this story to begin to gain legs as the months move on. Then we move on to the ECB rates decision. As I said earlier, Draghi's got a big decision to make. I don't think he's going to be moving much on this month, because you've had the inflation data that improved to 0.7% last month. But he does need to try and talk this euro lower, because he's been increasingly worried about the strength of the euro that is having the impact on the eurozone as a whole, and I think he's going to have to try and jawbone it lower. Now, how he does this is probably going to start to talk about engagement of possible quantitative easing or other monetary easing measures, but certainly this needs to happen, and I think that's what he'll be concentrating on tomorrow. Then we've got the weekly jobless claims, which, coming after those non-farm payrolls last week, are taking on an increasing importance. They need to stand up and continue to improve. They jumped to 344 last month, so back in the 320s this week would be a much better move. And then finally, we've got the Chinese inflation data on Friday as well, and once again, any Chinese data has an impact on the key commodity currencies. So that's what we've got to look forward to this week. I wish you good luck in your trading, and I will speak to you next week. Thank you very much.